Hi everyone, welcome to today's video. So on today's video, I'm going to speak about 3 specific stocks that I have in my portfolio that are trading or were at 50 rupees when I purchased them. So these are inexpensive stocks that we are going to talk about, and we are going to discuss whether or not it makes sense for you to enter into these stocks now, what are the buying levels, what are some risks and rewards associated with buying these specific stocks. So you'll have a discussion around it. So it's a pure teaching video. Please watch the video till the very end. Otherwise, if you implement half the understanding, you will make loss in the stock market. I will also talk about which is my favorite stock out of the 3 that I'm discussing. With that said, let's get the video started, and very quick disclaimers. Number 1, this is not a buying or a selling recommendation. Please act as per your understanding. This specially applies for this video because we are talking about inexpensive stock and these are heavily operator driven. So please act as per your understanding. This is the first critical point that I want to say out loud. Second, please check the links in the description box. These are the small cases that I have created so you can get a better understanding of some of the other stocks that I have recommended. So download the app. You can only view this small case through the app. There are no viewing charges for these small cases. You can definitely go and check it out. Third, let me quickly explain you the concept of inexpensive stocks. Many a times we as retail investors get super fascinated. We say that, you know what, inexpensive stock, hardly 2 rupees, hardly 3 rupees. What's the harm of pouring in a little bit of money? How low can it go? Well, it can go to 0. So that's an incorrect understanding that inexpensive stocks are good or they are value buys. Please understand this point, especially if you're a beginner in the stock market. Let me illustrate this point further by giving you a practical example. Let's say on one hand you have 2000 rupees, right? On the other hand you have 4 notes of 500 rupees. Which option is better? Honestly, it doesn't matter because it's one and the same thing because the value is similar. Similarly, there can be a very expensive stock like MRF, which trades close to 1 lakh rupees. Now, is that a better stock vis-a-vis something like JP Power, which is trading at 3 rupees, 4 rupees? Honestly, the price of the stock does not matter. What matters is to what extent that stock can grow or to what extent that stock can come down. So I hope this point is clear. With that, let's start the video. And the first stock that I'm going to speak about that I have in my portfolio is Union Bank of India. Now, I have been very bullish about the PSU stocks. I have been speaking about it on my channel for a while now. This is my holding of Union Bank. I also have PNB. I also have Canara Bank. And I also have a bunch of other PSU banks where I have diversified a bunch of my portfolio, where I have aggregated the stocks at lower levels. And now they have already given me a lot of returns. Now, why have I purchased these stocks? Okay, so let's first and foremost understand Mr. Rakesh Jhunjhunwala's recent perspective on PSU Bank. And so there were some very interesting points that Mr. Rakesh Jhunjhunwala made on this particular video regarding PSU Bank. He also explained that he is a big investor in Canara Bank. I had done a separate video on that. So please go and watch that previous video of mine. I had categorically spoken about this particular PSU buying in detail there. But let me explain the key concepts here again. So Mr. Rakesh Jhunjhunwala's viewpoint is that the PSU banks will grow because of 2 reasons. The first reason is the value argument. Right? Value argument. Now, the value argument simply means that these stocks are trading at market price which is less than the book value. The book value of these banks is higher than the market price. So, the share price of these banks should go up to the book value. So, that is the value buying approach here, that something is available at such deep discounts that it is falling below its book value. So, therefore, PSUs are good opportunity right now to buy. Now, is this the only factor that you must consider in terms of buying stocks? The answer is absolutely no, because by this logic, you can just take a look at current market price of the stock and compare it to book value and start buying all the stocks, assuming that all these stocks will reach up to the book value. That is incorrect, but in PSU banks, it's holding true. And I will show you the charts and graphs and numbers also in a minute. But let's understand the second argument also. There has been a massive change that has been brought about due to the fundamental shifts that have happened in the PSU space, especially banking. So what is this change argument that Mr. Rakesh Jhunjhunwala was speaking about, right? So change argument. So essentially you would have seen that post 2018, right? So this was the period 2016 to 2018 where there was a lot of NPA problems, right? People like Vijay Mallya, Nirav Modi took a lot of bank loans, ran away, right? And Punjab National Bank was somewhat of a party to it and bunch of other PSU banks. So that was a bad stuff. Then what happened? There was NPA problems. Then there was something called as Basel norms, right? So Basel norms for banking that were brought in during this period only. And then there was something called as ARC, Asset Reconstruction Companies. Now all these different things are interlinked. So what basically happened is this in simple language. I'm cutting out the details to make the concept simpler for you to understand. So basically, this is what happened in the banking industry, that there were a lot of people who were taking away loans, running away. It was creating NPA problems. Similarly, there was a lot of default that was happening. So these ARCs, asset reconstruction companies, they take the bad loans of banks, right? They buy it at lower prices and then they go and procure those loans, right? So through this, some problems of the bank is solved because banks still get some money out of their NPAs. That's one. Second, the NPA itself got controlled because now it's not easy, right? I mean, it's not as if that Akshat Shrivastava can take crores and crores and crores of rupees of loans from State Bank of India and run away. No, that will not happen. It's very, very difficult to do now because now the mechanisms have been tightened further, right? This used to be easy to do it in the past. Now it's getting harder and harder with the day and it's not easy anymore, right? So whatever fundamental problems had happened in the PSU banking sector, they had already taken place. Now we are on the path to recovery. Now let me do a very quick comparison of Canara Bank with ICICI Bank, and this is one of the points that Mr. Rakesh Jhunjhunwala was mentioning on his video. So here you can see this, right? So here you can see that the current price of ICICI Bank, if you look at this, it's 780, book value is 227. The stock is trading at a much higher level compared to its book value. What about Canara Bank? The current price is very less compared to its book value. This is one. Now you might say that, you know what, Canara Bank does not have growth prospect. Probably the profit margins are not that great. So therefore, it is trading at a significant discount compared to its book value. And you might be right, but let's take a very quick look at it. So if you take a look at the profit and loss, you will see, and this is for Canara Bank, you can take a look at revenues that from 2015 to 2019 period, there was hardly any growth in terms of the revenues. But this situation has changed quite a lot, right? The revenues increased in 2021. Even the last 12 months sales have been significantly higher. Same goes for profit, right? That 2015 to this period, 2019, 2020 period, lot of losses, negative, right? But here, positive revenues have started flowing in, right? And this year, Canara Bank has given the highest profit, 6,712 crores. What about ICICI Bank, right? Okay, so if we take a look at the book size of ICICI Bank for the last 3 years, the numbers are somewhat comparable. Right now, ICICI Bank is at 1,573,812 and Canara Bank is at 1,179,540, right? So it's not as if that there is a huge difference in terms of the asset size or book value. This is what Mr. Rakesh Jhunjhunwala was speaking about. But here is the difference. If you take a look at the stock price for Canara Bank or any major PSU bank except for SBI, you will find this trend that back in 2010, the stock price was trading for Canara Bank at 767 and here we are at 242. Huge aggregation is happening in this space, right? The same is the trend for Union Bank of India, same is the trend for Punjab National Bank. So essentially, there is a huge opportunity in terms of PSU buying. On the flip side, if you compare this to ICICI Bank's stock price, it has been on an uprise, right? So of course, ICICI is a great bank. I have it as well. But the value buying opportunity is with PSU banks. That is the reason why I had been aggregating so much of PSU stocks in the last 4 months. Now you might say, Akshat, you are selectively telling us stocks where you have made profits and you are sitting on profits. So you have handpicked those stocks. Show us a stock where you have made a loss, okay? Or you are currently sitting on a loss, okay? So here's the stock which I had purchased where the current market price is around 21 rupees and I'm sitting on a loss. But I feel that this stock is still reasonable and I will be able to exit with profit on this stock subsequently. I'm talking about Hathway Cables. Now this is a subsidiary that is owned by Reliance. Now, Reliance has a major stake in this company and let me first and foremost take you through financials of this company. Right, so if you take a look at the sales have been constantly going up. Majorly speaking, in 2015 it peaked, post that it bumped down and since then it has been going up. So it has been fairly doing consistently well, not a problem there. Now, what has happened is, if you take a look at net profits, you will realize that this has always been a loss-making company except for the last 3 years, right? It has mostly been negative. So you need to understand why this company was generating so much of negative profits for the last so many years and suddenly why it has become profitable now. The answer lies in cash flow statements. If you take a look at cash flow statements for 2021, you will see that cash flow from financing activity is extremely negative. It's like 2,000 crore negative. Why is that? Because it was a high debt company and it has paid majority of its debt. And if you take a look at the debt right now, the debt to equity is 0. So it is a debt-free company as of now. This is the mandate with which all the Reliance Group companies are operating right now, that they want to just do away with debt. They understand that, hey, Right now, we are living in an environment where the interest rates are very low. So borrow money in real terms, literally for free, pay off your debt and be done with it, right? So this is a great time for these type of companies which are high debt, which are owned by big conglomerates, to pay off their debt and take the next round of their growth. Now, let me just very quickly take you through the promoter holding trend also of this company. So in 2019 is when Reliance acquired stake in this company. And then as per SEBI's mandate, they had to bring down their promoter holding. So there was massive sale of this stock that happened by the promoters. Therefore, you see the promoter holding coming down to 75%. So there is nothing to worry about in terms of promoter holding for this stock. Now, if you take a look at FIIs, DIIs, they have all been generally increasing their holding in this stock, which is a good sign. And this gets reflected where? This gets reflected in somewhat of this aggregation that is happening, right, of this stock. So you can clearly see, right, that pick a period where so much volume has come in this stock, right? This is the period where the majority of the volume has come in. So I'm quite hopeful that this stock will bounce back again. It is already a deep value buy for me. I will aggregate some more position in this stock. Again, not a stock buying recommendation because this is dangerous game. So please trade at your own risk. I'm just here to educate you. Please don't buy at my behest. Humble request, right? Because these penny-like stocks can be manipulated a lot by the operators that say, second, this is a Reliance-owned entity, and I'm not a big fan of Reliance, how they treat their shareholders. I invest because I see deep value buying opportunities, but it's not as if that I'm a big fan of their management as a shareholder, right? So, because of these reasons, this is not a buying recommendation. Please buy at your own risk. I just explained you all the fundamentals, how I am looking at the stock. You need to do your own analysis. The third stock that I have is called as TV18, again owned by Reliance, and the current stock price is 46 rupees. 46 rupees. I am already on good profits on this stock. I have done a lot of swing trading on this stock, made a lot of money, reinvested it, and I'm very happy with the results of this stock that it has given me so far. So essentially, it's a bonus for me now. If I hold it and even if my entire capital becomes zero, I'm still okay with it. I've already made a lot of money on this stock. But what is the good quality or good things about this stock? Let me quickly comment. So one is that sales have been continuously going up massively, right? So the sales have gone up quite a lot from 2018. The company is growing profitably, which is good news. And the third thing that I want to do a comparison of is with the Zee Entertainment Network. So if you consider the stock PE of Zee Entertainment Network with TV18, you will see that there's a huge difference in terms of PE. For a growing company, the PE expansions usually happen, right? So I'm betting on that. Second point is that if you take a look at the ROCE, right? If you compare it with Zee, you will see that ROCE for both the companies are similar. So it's not as if that TV Network 18 is falling somewhere. Then why is its PE not growing? It's just that there is not enough interest in this stock as of now. Therefore, probably the PE is not growing at a scale at which Zee Entertainment Limited's PE grew. I'm quite bullish about the fact that with TV18 also, the stock PE will expand. Why? Because of this, right? So PE, right? So if earnings have gone up, the price will have to go up, right? That is the simple point for the PE to remain same. Now, for a company like TV18, the earnings have been going up consistently. So therefore, the price of the stock will also have to go up even to maintain the same PE. So this is like a PE buying analysis that I've done. Of course, I'll not be able to cover all the points regarding PE, but hopefully this helps you understand how I'm thinking about these less expensive stocks, and accordingly, you can also take your bet. So I said that I'm going to talk about my favorite stock out of all these three. So I would say that if you have to pick one out of these three, it should be. Comment your answer below. Try to guess what I'm going to say next. It would be fun for me to watch that. So comment your answer below, and here's my answer. So my answer is I would buy PSU banking stocks. Super simple, because honestly, at this stage, if you think about it, what is happening from the macro perspective is that the first major growth in terms of the banking sector is done. What do I mean by that? It simply means that, for example, HDFC Bank became so big because it was able to incorporate something called as core banking solutions. It was able to open the branches really quick. It was able to serve the customer really well. But now if you think about it, honestly, the cost of capital for any bank is almost similar now, at least the big ones. Hardly any major difference there. Number two, the customers do not interact with bank much, right? This is happening, right? This does not mean that HDFC Bank and ICICI Bank will do poorly. They will continue to do really well. They will continue to gain market share. These are not the stocks that will go like 5x, 10x, right? That will give you stable, consistent growth. So these are good stocks to buy, no doubt. But because of the deep value buying opportunity in PSU banks, I still feel that there is a lot of ground to be covered here. These PSU banks have taken so much beating for the last almost 5-6 years that it's their time now. They are going to grow faster, and honestly, we have moved to a banking world where customers do not really engage with the bank that much. They sit at home and do like net banking transactions and whatnot, and it's super easy to do. Not kidding, SBI has come out with really interesting stuff. So honestly, what I'm getting at is that it's not as if that, there's going to be a huge difference in terms of the services that will be offered by HDFC versus SBI versus some other bank. The reason is very simple, that customers do not want to be served now. They can just sit at home and get service themselves by using the app, and that is what they are doing. Now, a lot depends on HDFC, ICICI, how they are incorporating new digital systems and defining that new next leg of growth, right? So it would come to that. So that is a growth play when it comes to HDFC, ICICI Bank, Kotak, etc. That's a growth play. They have to keep on innovating. But with PSU banks, right now it's a value buying opportunity still, right? So if you have to pick one, I would go with PSU stocks. So aggregate it, buy different PSU banks and diversify. So that would be the way to go. So I hope you enjoyed the video. Please press the like button and also check out my small cases in the description box, and I will see you the next time.